Flextronics operates in printed digital board industry on the electronic management service. With a market cap of 5.2 billion, it's the largest company in this industry. It designs, builds, and ships completed electronic package to its customers. Its customers can be categorized in 4 different groups: high reliability solution, high velocity solution, industrial emerging industry, and integrated network solutions. Now for the next 5 forces, Zhao will explain power of buyer.
Okay, let's begin with the power of buyer. After we did all the research, we say that the power of buyer for Flextronics is high. Flextronics have 108 customers, including Sharp, Google, and Apple, and so on. Almost 4 to 7 of the companies share the similar business, so it will be easier for Flextronics to find the substitute company. However, most of the companies come from high technology industry, even including the Flextronics itself. So the high volatility would determine that all of them will pursue smarter and new creative production. Once they found them, they will decrease the production import from Flextronics. And we can see here it's a different percentage of revenue each company account for Flextronics. Those 10 companies showing here almost take more than half of the revenue for Flextronics. So losing those critical customers will inflect Flextronics' future a lot. And when facing those strong, famous companies like Google, Apple, and Lenovo, would weaken the the price negotiation ability. And we came here to say that the intensity of competition is high. Let's start with the revenue. We can see from the chart compared to the other 2 competitors, Selectric and JBL, the revenue is relatively high. However, it doesn't show everything. Because when we go to the gross margin, which shows here that the Flextronics is in the bottom line, so it doesn't have a strong power to keep its return on each dollar after subtracting all the costs. We use 3 ways to measure the capital allocation, which is ROA, ROE, and ROC. And from all the graphs here, which shows that Flextronics is all in the bottom line, so it doesn't have a strong power to allocate the capital effectively. Now please let me introduce my colleague Steve to give you the lecture on threat of substitute.
We consider vertical integration as a substitute for Flextronics, because Flextronics gets its business when companies like big companies like Apple and Google, they outsource their production department to Flextronics. And the reason for vertical integration would be they would get a guaranteed supply and distribution chain, and at the same time they will also free up the investment that will be tied with the department. But the main reason the companies outsource and Flextronics gets its business is because so they can focus on their core business, and also it's beneficial to take advantage of the economies of scale that companies like Flextronics enjoys. Now for power of suppliers, we think it's high because for the whole industry, the Flextronics, Celestica, and Jabil, they have their cost of sales more than 90%. And the reason for that is the components that they use for their products are highly customized to their customers' demand, and also the customers can cancel or change their demand. That would reduce the lead time that can supply the components for Flextronics. So for that reason, we think that Flextronics must have a very good relationship with the suppliers so that they can react to such change immediately. And also that comes to my next point, high switching cost, because of all that I mentioned previously with the customized products towards the customer's need. Flextronics has a high switching cost between its suppliers, because everything is chained towards the demand of the customers. Now for threat of new entrant, I'll call upon Lalima.
Thank you, Steve. Now let's look at threat of new entrants. We think that the threat of new entrants is low. In this industry, which is all about low cost, economies of scale play a very significant role, depending on determining the success of a company. So what do the current players do in order to have an economies of scale? They engage into acquisitions. For example, Flextronics recently acquired Motorola Mobility, Revisa, which is a Switzerland-based company. Acquiring these companies adds to its productive capacity, which helps in attaining economies of scale. But if a new entrant is entering in the industry, it's very difficult for a company to acquire a company and attain that cost advantage. The next thing we see, besides scale, the thing which plays an important role is the productive capacity. If you can see from this chart, Flextronics has the second largest productive capacity. So, for a new entrant, even if it has the economies of scale, in order to add to this capacity will take a long gestation period, which is not really the characteristics of this economy of this industry. Now let's come to valuation. We have used a two-stage model for valuing Flextronics because it is a technology-based company. So we have broken down the growth rate into two parts. We have used a growth rate of 5.9% for the next 5 years, which is the expected growth rate for the electric assembly line for the next 5 years, and we have taken a 0% growth rate for the next 15 years. We are forecasting the cash flows for 20 years because given the volatile nature of the industry. This is how we calculated the owner's earnings. According to the investors' report, 35% of the capital expenditure was towards maintenance and 65% was towards growth. So we have used the same metrics to calculate the capital expenditure breakup. Doing the math, calculating the NPV and adding back the excess cash, we arrive at intrinsic value of 16.54. The company has an economies of scale. It has an efficient and effective supply and distribution channel. However, it bears the risk of being in a technology industry which by nature is very volatile and risky. So considering all those factors and comparing it with the stock price, which is 8.9, we currently recommend a hold on Flextronics.